Swayam Prabha. Digital India. Educated India.
Welcome to this session on commodity derivatives and risk management. If you recall, we discussed about different aspects of crude oil derivatives in crude oil spot prices in the previous session, and we discussed about different qualities of crude oil depending upon the API gravity and as well as the sulfur content, and how a crude oil variety can be categorized as light, medium or heavy as with respect to the API gravity, and a crude oil can be categorized as sweet or sour depending upon the sulfur content. And we also discussed about 4 marker crudes, that is the WTI crude, Brent crude, OPEC reference basket crude, and UAE Dubai light crude. Besides these 4 marker crudes, we also discussed about 4 crude indices, that is your Argus sour crude index, as well as Japan crude cocktail index, and Indian petroleum index, which consists of a ratio of Dubai crude as well as sour crude in the ratio of 65.2 to 34.8. So now today we will discuss more about what factors influences the spot price, and we'll also discuss different derivative contracts which are traded in Indian exchanges, Indian Commodity Derivative Exchange as well as Chicago Mercantile Exchange, as well as many OTC contracts which have been signed by buyers and sellers of crude oil as well as refined products. So I cannot say thousands, hundreds of derivative contracts are available to hedgers to mitigate the price risk. So today let's start with understanding what influences the crude price, but before that let's analyze how crude prices have moved in last 10-12 years. Okay, now to start with, I'll just take you through this particular Excel file. If you see this one, the column 1, let me make it a little bigger. I hope, yes, now it will be able to see. So this first 3 columns, that is first 3 columns, that is or BCD, column BCD shows the price of WTI spot price, Brent price and Dubai Fateh price, and the column E shows the difference between WTI price and the Brent price. And this particular chart shows how these 3 prices marker crudes, that is WTI Brent, WTI crude, Brent and Dubai Fateh has moved. And if you can see, it has progressively gone, it has gone up, and it all these 3 crude oil prices reached a peak of around $133 in the month of July 2008, and subsequently it has fallen, and what we are currently at around in May, June, what we are currently seeing, Dubai Fateh. Okay, let me take the whole data to the last. So around May 16, the spot price is WTI crude is quoting around $46.85 per barrel. Brent is quoting at 47.13 and Dubai Fateh is quoting at 43.96. If you recall, last class we discussed about the API gravity of different marker crudes, and we also discussed that WTI crude has the highest API gravity. So going by this specification, WTI crude should be quoting at a higher price vis-a-vis the Brent crude. In fact, it was quoting at a higher price for a substantial number of years, but sometime around May 2006, the WTI crude started quoting at a WTI spot crude price started quoting at a discount to the Brent crude. So this second picture, this picture which I am just clicking, this shows the price difference between WTI and Brent crude, and if you see, it is all it remained almost positive up to May 2006, and from May 2006 it the difference increased substantially, and by September 11, 2011, it was the difference was $25 per barrel. That is, WTI was quoting at $25 per barrel less price as compared to the Brent, and subsequently this price difference is quite narrowed down, and it's both the crude prices are trading at almost at a par. Now my question to you all is that if WTI is a better quality crude, why Brent crude is quoting at a premium over WTI crude? Okay, the answer to this particular question has been very succinctly given by this quote by Bloomberg. So Brent represents the Northwest Europe sweet market, but since it is used as benchmark for all West African and Mediterranean crude, and now for some Southeast Asia crudes, it is directly linked to a larger market. So more number of participants, buyers, sellers are in the buying and selling crude which are pegged to the Brent crude. So this is the reason why the Brent crude prices are ruling little higher than the WTI crude. However, one thing, without going into the nitty-gritty of this price difference, one very clear-cut observation we can make out that crude oil prices have reached the peak of around $133 during June 2008, and it has almost come down 1/3 of it, around quoting at $46-47 a barrel in the spot market. So this poses a significant amount of risk for crude producers. So what crude producers have done to mitigate the risk, if at all, we will try to understand as we go ahead in this lecture session. In this context, when we discussed that crude oil price has gone down substantially, I would like to discuss something, the role of OPEC as well as the shale oil and gas production environment in USA. So in the last class we discussed how OPEC has been the major crude oil producer, and OPEC members decide how much to produce, and that kind of governs, or that used to govern the crude oil price globally. So OPEC was considered as a swing producer. So what do we mean by a swing producer? Swing producer is a producer that influences price of a particular commodity by raising or lowering the output to balance the market. So OPEC was performing this role. So if crude oil price goes down substantially, OPEC member will decide to cut the production so that the market price increases and OPEC member is able to generate decent amount of revenue. Now during 2014-15, around November 2014, OPEC decided not to play this role anymore. OPEC did not reduce, even if the crude oil price was going down substantially in a progressive manner. OPEC decided not to play the swing producer role and decided not to cut the production amount. In fact, it officially announced that it is going to maintain the amount of crude oil they were producing earlier years. Now let's go to what prompted OPEC members to abandon their role as a swing producer. One of the important reason is the supply of shale oil and gas in USA market. So let's first understand what is shale oil. So shale oil is extracted from reserves which are held in rock formations, for which it does not, this shale oil does not flow out naturally. This oil is also known as a tight oil, and due to the technological advancement in drilling techniques, this shale oil has become more accessible, and USA is pumping or generating shale oil in copious amounts, and this has resulted in, or USA has started flooding the market with excess amount of shale oil. And this shale oil is drilled from the underground surface using a technique called horizontal drilling and the hydraulic fracturing. This process is also popularly known as a fracking. And if you are more interested in knowing how exactly this process is undertaken, you can go to different websites and spend some time to understand more about this process and how shale oil is generated. But the essence of this discussion is that the shale oil production in USA has gone up substantially. So now let's go to the next slide, which shows the production of shale gas in USA. Before I go to this particular slide, I would like to mention that shale oil was always produced in USA. USA has abundant volume of shale oil and gas. However, the improvement in fracking technology has made it possible for US companies to extract shale oil at a reasonable rate, at a reasonable cost. Now, shale oil is also, as mentioned in this slide, shale oil is substitute for conventional crude oil, and USA has abundant shale oil. Extracting shale oil from oil shale is costly than the production of conventional crude oil. However, in recent years, USA has spent considerable amount of money, or a lot of investment has come into this extraction of shale oil and shale gas, and which has caused a boom in the supplies during 2012. So this particular picture I have taken from Energy Information Administration website. So if you can see, from 2012, in fact from 2010 onwards, the shale gas production has gone up, and it is substantially higher, even it's going on even in the year 2016. So when US shale gas producer were pumping the world market with shale oil, the role of OPEC as a swing producer, or OPEC decided not to continue with his role as a swing producer, because with the shale gas boom the crude oil price was going down, and if to stop this price decline, OPEC member, if they would perform their role as swing producer, OPEC members have to cut their production. Even if OPEC member cut their production, crude oil price decline will probably not stop, because anyway US companies and US companies are will continue to produce the shale oil and shale gas, which will result in decline in the crude oil price. So OPEC members, that's why OPEC members decided not to continue with their swing producers role, because if they would continue with that swing producer role and reduce the production, they will end up getting less revenue, because price will not go down even if they can reduce their production, and reduce production less production quantity into less price, so they are going to generate less revenue. So this this particular link which is mentioned, shale versus crude, why oil prices are on a free fall even as OPEC members suffer. So this particular article this particular article, please read, this is a nice article which shows why or which mentions very clearly why OPEC has abandoned its role as swing producer, because doing so is not going to in any way, it is not will be able to impact the crude oil price. So this is the link is available in the PPT, which will be made available when you will be seeing this video. So please spend some time and understand more about how shale oil production has affected the crude price. In this shale oil boom, there has been a significant benefit to Indian economy. Of course, Indian economy has benefited significantly in terms of buying crude oil at a cheap rate. Almost all global economy, all countries which are major consumers of crude oil without having significant production volume, most of them have benefited from the decline in crude oil prices. But India has benefited from another angle, that is guar gum is used in the process of fracking process. So this guar, if you recall, I discussed in some earlier sessions about guar gum futures, guar seed and guar gum futures being traded at National Commodity Derivative Exchange. And this guar gum is produced, guar seeds are produced from guar bean, and these guar beans are crushed to arrive at guar gum. It's a natural emulsifier, and it is used in the process of hydraulic fracking. So coinciding with the shale oil extraction boom in USA, Indian agri farmers, guar farmers started exporting guar gum, and you will be surprised to know that in the year 2011, guar gum export was the India's largest agricultural export to United States, starting at with valued at 915 million as per the US Department of Agriculture report. So of course, price, though India benefited from this guar gum export, but there are something interesting which I thought of sharing. In fact, when guar, coinciding with the shale gas boom, when guar gum and guar seed prices increased, lot of traders entered into long futures contract in guar gum and guar seed, and also simultaneously with their with their acquaintances, they started cornering the physical market. So this led to significant price rise in guar gum and guar seed, and this information, this discussion I have, if I not if I am not mistaken, I have discussed this aspect about in one of the session, how the excessive speculation in futures market led to a increase in the spot market price. So most of you may be thinking that yes, if spot guar prices goes up, Indian farmers benefit. No, they did not benefit, because the speculators or middlemen who had already cornered already stored guar gum, they were the people who made the maximum benefit. And also, if you recall, National Stock Exchange, National Derivative Exchange, National Commodity and Derivative Exchange cancelled the guar gum futures, guar gum and guar seed futures trading for some point of time, coinciding with the excessive price volatility in the spot market. There is also a negative side to the whole whole aspect. The price, guar gum prices increased so much in India that the importer of guar gum in USA started found the price to be too prohibitive, too expensive. So now guar gum is being planted, and in USA and in Texas there are many big farmers which have started producing guar guar seeds, and they will be manufacturing guar gum. So at the end of the day, a new avenue which was emerging from India, export avenue which was emerging from India, probably will come to an end, because some unscrupulous speculators activities led to the probably complete demise of this opportunity for Indian economy as a whole. Now, I'll just quickly take you through a little bit about India's crude oil and refined product market, and all of you know that when we talk about upstream activity in crude oil, it is related to the exploration and production of crude oil, and when we are talking about downstream activity, it is mostly dealing with refining and retailing, or selling the refined product to ultimate final consumers. And in Indian case, both the upstream activity as well as the downstream activity is heavily regulated by the government, and mostly government owned public sector entities are operating in these two sectors. So who are the major upstream companies in India? You have ONGC Limited, you are of course in the private domain, you have Reliance Industries Limited, and you have Cairn India. So these three companies are predominantly involved in upstream activities, and you have a downstream or midstream activities. You have Indian Oil Corporation, Hindustan Petroleum Corporation, Bharat Petroleum, Numaligarh Refinery, Mangalore Refinery, and even Reliance and SR Oil, etc., from the private domain, private companies, they are operating in the downstream market. However, the price at which these companies produce the crude oil or the refined products are also heavily controlled by the government. So that kind of that has restricted on the impact of price volatility on many of these companies. So this aspect we will also discuss a little later. Now let's go and discuss more on what are the factors which influences the crude oil prices. It is a very difficult task because so many factors influence the crude oil prices that it is very difficult to pinpoint or exactly identify which are the which factors influence. However, in this coming 5 to 10 minutes, I am going to identify or discuss which are the major factors which influence crude oil prices. So crude oil prices, all of us, we know the whatever happening in geopolitical activities in Middle Eastern countries and major crude OPEC countries. So that has got a strong bearing on the crude oil prices. So this, let me take you to this is this website is US Energy Information Administration website. So this particular picture is one of my favorite pictures. So this shows the crude oil prices react to variety of geopolitical and economic events. And if you can see this one, these are from 1970 till 2016 till today, they have identified 12 major geopolitical events which have had influence on the global crude oil prices. So starting from US spare capacity adjusted of Arab oil embargo, Iran-Iraq war, 9/11 attack, and OPEC cuts the production target to 4.2 million metric barrels per day. So the different aspects, different important events are mentioned. So do spend some time if you are interested to know more about what geopolitical events influences the stock price. This is one of the best source for understanding the impact of this factor on the crude oil prices. Now, of course, demand for any commodity depends upon the supply and the demand. Or prices of any commodity depends upon the supply and demand condition. So in the demand condition, you have a growth in population, and economic activities are important driver of crude oil. So the what happens in China, the industrial activity of China and the population growth in China as well as in India is considered to be one of the important driver of crude oil. And another, many times this aspect is also discussed about the financialization of crude oil with oil futures and option contracts. So what do we mean by financialization? Financialization means different people who have nothing to do with the underlying commodity for their day-to-day operations. They are neither producers, they are not their consumers, nor they are any value chain partners. But when they start trading derivative contracts on these commodities and try to make speculative profit by investing in these commodities, the fundamental factors influencing the commodity price becomes less important, and other speculative factors becomes more important. So UNCTAD November 2015, this particular report mentions with the volumes of exchange traded derivatives and commodity markets now being 20 to 30 times larger than the physical production, the influence of financial market has systematically transferred the real market into financial markets. So real market forces are no more governing the prices of these commodity, but the forces or these real markets are becoming like a financial market. So that is also another reason. Many times this many industry, many academicians, many researchers are pointing out to the unnecessary or excess volatility, commodity price volatility, because lot of investment speculative money is getting invested in these commodities. So with this, we will be ending up in today's session, that is the factors which influence the crude oil prices. So just to summarize what we discussed is, we started discussing about the movement of 3 marker crudes, that is your WTI, Brent and Dubai Fateh, and analysis of the prices. We realized that all 3 crude contracts peaked during May-June 2008, and around May 2006 this WTI crude started quoting at a discount to the Brent crude, and till now thus discount continues, though the difference between Brent and WTI has gone down significantly. We also started discussing, we also have discussed the impact of shale oil on crude oil prices, and the impact of shale oil production on OPEC members. We also discussed impact of shale oil on India's guar farmers, and how India could earn a substantial amount of foreign exchange by exporting guar gum to USA. We also we have also discussed the factors which influences the crude oil prices. Now with this, I will end up today's session, and we will be continuing with the remaining part of factors, which factors influence crude oil prices in the next session. Thank you all of you.